Greetings, my YouTube family. Thank you so much for visiting this channel. And on this channel, we talk about personal finance and investing. And today, I'm going to talk about how to invest in the S&P 500 ETF index, and in particular, as a continuation of the part one series that I recorded. So I'm going to walk you through the agenda for the day. Like I said, I will talk about the introduction of the exchange traded fund, SPY, and also the composition of that ETF, and also walk you through how I can actually practically buy shares for the SPY ETF. And then conclude by looking at the merits and potential risks if you want to invest in that particular index fund. But I do want to just disclaimer that this content is just for educational purposes. As such, it should not be taken as investment advice. So please just bear that in mind. And for starters, just for introduction, my name is Isaac Jonas, and I started Streetwise Economics on December 4th. That's when I actually started posting videos on personal finance and investing, and I've been, finding this interesting. But basically, I'm an economist by training. I hold 2 degrees from the University of British Columbia, Master of Food and Resource Economics, and also a Master of Arts in Environment, Resource Environment and Sustainability, and also a BSc degree in Economics from the University of Zimbabwe. I have been lucky enough to be awarded over 200,000 worth of scholarships for my graduate school here in Canada. And I am a retail investor, and what that means is I also invest in the US and Canadian stock exchanges, and I started in 2023. And I like creating educational content like this, but specifically on personal finance and investing. Now, as a recap from my most recent video where I explained the history and the performance of the S&P 500 index, which was established in 1923, I did that just to provide a historical account, in terms of the performance. It has gone up and down as the index, right, itself, so that at least you have an idea of what it is. So please feel free to check that out, that video that I posted, if you want to have that background here. And then secondly, today I'm going to then, like I said, specifically focus on how to buy the shares through the ETF, that is the exchange traded funds, with the ticker name SPY. Basically, an exchange traded fund is a situation where investors or stakeholders, like retail investors, institutions, or whoever may want to invest in that fund, pool the funds together, and that fund is managed by a fund manager. In this particular case, the SPY is managed by this ETF is managed by the State Street Global Advisors, right? And they're based in the US. And essentially, this exchange traded fund seeks to mimic the Standard and Poor index, right? That I said it was started in 1923, by picking those stocks that are similar to those in that index. And there are about 500 of those companies that are in that index, in terms of the individual companies in the US that constitute 80% of the US economy. And this index, this ETF in particular, it has very high average volumes per share, right? So it's good if you want to buy and sell, because then in some cases, some securities or even individual stocks, they don't have as high volumes like this. So this ETF was started in January 2022 in 1993, and when it was started, it really revolutionized the investment landscape, because people like me were now able to just buy and sell shares, right? So that was not the case in the years before 1993, and particularly the SPY ETF, the S&P 500 index with the ticker name SPY, is particularly interesting because it has a broad exposure of the US economic economy, right, in terms of the sector composition. So it means if you buy one share of the SPY, you have the exposure, as I will explain, in different sectors, because in some years some sectors might do well, like last year in 2023, the technology sector, even though it started off um, uh, in a negative territory, it then went up and closed the year performing very well, with companies like Meta, even Apple, Microsoft doing really, really well in terms of their returns or performance in that particular year of 2023. And they pulled the S&P 500 up. And then basically this ETF is about 486 million assets under management, and you can see here that it is mostly tech heavy in terms of the weighting. You can see that technology here, information technology, it is about 28%, in healthcare and financials they 13% weighting. So it means that companies like United Health here, the other that are part of this SPY ETF, right? You find them in this category. And then you have consumer discretionary, which is about 11%, and also consumer staples. So you can see the composition here. And like I said, the beauty about this ETF is that if other sectors are not doing well, those other sectors that are doing well can pull the average return upwards, right? Which is a good thing. Now, that was the case last year, right? Because the technology sector, it did very well. Companies like Nvidia, they went up by multiple times, and then even Meta, like I indicated below. Now I just want to quickly walk you through how I buy shares. I just bought this one share today, to just explain how this works. I use a broker called Quest Trade, and I am not promoting the broker per se, brokerage per se, but I'm just going to show you how I do it using my example. So when I want to buy the share, like I did today, I just go on I open my brokerage account, of course, and then go on the symbol lookup, that's the interface here, and I look for the ticker name SPY. It's like if an airplane wants to land, they have at an airport, they have a code. For example, YVR, it's for Vancouver International Airport. So in this case, SPY is the ticker name. So I search here, and when I search here SPY, it automatically gives me the option to buy or sell. In this case, I just click the green button to buy, and then it automatically gives me the option, because I programmed it in this case to buy shares in hundreds slots. Slots of 100. So I then change here to make it one, because I just want to buy one share. You can see that one share here, at that time that I wanted to buy the shares, it was $468.35, or the ask price was 468.36, and I will explain a bit about that in a second. But you can see that you can place a limit order. In other words, for me, if I choose the bid price, in other words, to just buy at this price, then it will just specifically buy for this price, right? That one share. And if I choose to just uh, buy it within a day, if that price is triggered, then I would just leave it as a day. If I want it to run maybe for a week, or until the order is cleared, I can tweak the duration here. But you can see that just for starters to explain, because for some people it might be new, you can see that the bid price and the ask price, what happens is, like, there is demand and supply here. There are people who are selling shares, and there are people who want to buy shares, like I want to do. So you can see that those people who want to buy shares, in this case, there are 31 shares that are on the market at that time that were available, right, in this brokerage. And then there were 7 people who were actually selling the shares, right, at this price, which is $468.32. That was the ask price. Basically, it's more like the market price, in the sense that if you then want to buy and someone wants to sell, right, at the end of the day, that's how the transaction go through. Because if you buy or sell shares, there has to be another individual or another person to or even institution to buy those shares, right? And then that transaction happens thanks to through a brokerage, like I'm demonstrating here through Quest Trade. So they just match those who want to buy and those who want to sell. And then if there is a match, then boom, that transaction then goes ahead. But you can see here very interesting statistics that the volume today was 7.45 million that were transacted at that time. And you can also see the statistics that today the highest at that time was 470.96 per share. So the share, the highest at that time was, it went as high as $470.96 US dollars, but it opened the market at $468.30. So it went up a little bit. But usually I like to buy when it's a red day. You can see here that it's red, but because I just was too busy, I had to just press the ask price, because I just wanted to my transaction to go through. So what I did is I just bought one share like I demonstrated, and you can see that the commission and fees here, they were zero. That's one advantage of buying the ETF like SPY. In other words, when you buy, you have to pay some fees. If I buy individual stocks, I can pay as much as $4.95 per transaction, whether it's 100 shares or one share. So this will definitely work to your advantage over the long term if you're a long-term investor, because those fees, they can add up. Now I can see that I had to modify because, like I said, I was rushing. You can see that the market had actually gone to the green because it goes up and down, of course. And then I just placed another order at the ask price to clear it, and then fortunately it was executed. In other words, my trade went through and I was able to buy one share for SPY for 468.78. Right, I was using a limited day. I just wanted it to be bought, to the order to go through today. If not, I was going to check again tomorrow, because again it might drop, right, or go up. So I just want to just do it right away. So this was the email that I got from my broker to confirm that my transaction had gone through. Then obviously, when you are investing in securities, there are usually risks and opportunities. So I will say that even though SPY ETF is a very interesting security, it has some advantages in the sense that it is well diversified, capturing about 80% of the top publicly listed companies in the US, right, as measured by the Standard & Poor 500 index, right? So this ETF, it mirrors that index. So in other words, we have exposure as an investor across those different sectors, like I said. And then the convenience of just having someone, a fund manager, do that for you, right? And what it means, if you have one share ETF for the SPY, you will have exposure to those different businesses like Apple, United Health, Tesla, right? All in one share, of course, in different weightings for those individual companies. But that's good, because then someone is doing that for me. So for me, I have other things that I like to do during the day. So if I have someone who can manage and do that for me, then that's good, because I don't have to do the research and look for individual stocks in that particular incident when I buy, the low cost index funds. And you also have the benefits of tax advantage. I do passive investing. In this case, I just buy for a long term, right? 10, 20, 30 years. So I don't buy and sell in this particular case. So what it means, if you sell your securities, right, sometimes it triggers tax liabilities, because in this case I'm Canadian. So if I buy US stocks, like in this case, right, and then I have capital gains, in other words, if my share value goes up compared to the price that I will have bought that share for, then that difference minus fees could then be capital gains, and then it could be taxed if it is in a brokerage that is taxable, like if it's not tax free. But also in terms of the dividends that accrue from the SPY ETF, which is about 1.4% yield per year. So they are taxable in the US. They actually withhold that tax. But if I invest in an ETF that is actually dominated in Canadian, that is in Canada, then I don't have to pay those withholding tax as a Canadian, right? So what happens is that at the end of the day, those are important things to consider when you're investing, right? Because overall tax liabilities, they actually can reduce your overall return. So I consider those, and like I said, on average, it can trade as high as, you know, like 81.82 million shares per day, uh, when it's really like there are a lot of there are high volumes. So the good thing is that sometimes you just need to buy and sell, you know, quickly. There are some exchange traded funds or individual stocks that don't have as much volumes, right? So what it means is you can be stuck. Let's say there is a drop in the market and you want to get out. The advantage of this is that it's highly liquid. You can get in and get out very quickly, right? So that's another thing, key thing to consider. Now, in conclusion, the risks, like any security, there are market risks. The market, it fluctuates up and down, so you really have to be prepared for that. I showed that in that video that I was mentioning before this one, the part 1 series. So I showed that in some years, for example, there was the Asian crisis, it dropped, and then there was COVID, there was also the dot-com bubble, and all these particular incidents, it goes up and down. But if you can hold on for the long term, it means you can take advantage of that, and still, if you don't liquidate, you won't lose your money, right? Then there's inflation risk. In other words, inflation in Canada and the US as of December, it was about 3.1%, up from over 5%. So it means if you make 10% return and inflation is 3%, the real return is 7%, 10 minus 3%, right? So if it goes to 10%, then it means in terms of the real return, it might be zero. So that's very important. But historically in the US and Canada, it has been around 2% per year. So there's also the credit risk, in the sense that out of those over 500 companies that are in this ETF, they're about 503, sometimes exactly 500, it just depends, right? Those are that are in that ETF. They there can be one company that might declare bankrupt. Let's say Apple hypothetically goes bankrupt. It has a weighting of 7%. Of course, it's going to cause the value of the ETF to drop, and so that's the risk. So you should be prepared for that. But the good thing is that there are other companies that are in there, right? Unless there's a doomsday scenario, let's say there's a nuclear war or something, right? Then everything then ceases to matter much. So at the end of the day, it's kind of, it's actually well diversified, like I showed you. Then there's the liquidity risk, like, it's highly liquid, the SPY ETF, but in some cases, maybe it may not be as fast as it could be if you want to sell or buy shares. But generally, I find it to be good, but it depends on the market conditions. And by the way, I just got this information from the ETF website. It's there, and they actually share those ETFs. And usually, because I buy shares from this uh, fund, what they do is they send me a booklet at the end of the year. This year I haven't received it yet, but where they actually tell you that these are the risks that are inherent with you holding this particular fund. And in conclusion, as a long-term investor, it's very important to be clear in terms of your objectives and the risk tolerance. For me, if it fluctuates and it drops by 30-40%, if I have money, I can even buy more for the long term, because my time horizon is 20-30 years. I don't intend to sell in the short term. So that's good for me, because then I can buy at a discount. Uh, but if someone wants to buy, and of course it's not investment advice, if someone wants to buy a house, let's say in a month or so, if you put your money in the SPY ETF, it might drop, let's say hypothetically, by 40-50%. It means your share values would have dropped by that percentage. So you can potentially lose if you liquidate. But if you don't liquidate, then that would be good. So it's very important to be clear in terms of your risk tolerance. So that's it for today. And if you have not yet subscribed to this YouTube channel, please consider subscribing so that you can watch content like this in the future. And that's it for today. Thank you so much for listening, and have a great day.